All right. So have you ever noticed that feeling you get like when the crypto market takes one of its, its classic dips? It's
Yeah.
like, and we've seen this movie before, right? It's like you know what's coming. But there's still this kind of like suspense that gets you. And I don't know, maybe even recently you felt like a little bit of excitement, right? Like there were those whispers going around that alt season was maybe about to kick off, but then things kind of took a pause. Does that sound familiar?
Oh, absolutely. Especially for those who've been, in this space for a bit. The waves of optimism followed by those periods where everything just kind of, takes a breather. It's like this, it's like a rhythm, a familiar beat to the market.
Yeah, yeah, exactly. And that's kind of why we're here today for this deep dive. We're not going to get caught up in, every little price fluctuation or jump on every, rumor train. Instead, what we're going to do today is try to like zoom out a little bit, right? Look past the day-to-day noise and focus on what could be a really important signal, like something that could give us, a better idea of what the future might hold for, cryptos as a whole. Especially for those of us out there, I know I'm one of them who are really, watching our altcoin bags pretty closely.
Definitely. And this potential signal, it kind of comes from understanding the bigger picture, the broader economic environment, and specifically what the Federal Reserve is doing.
Exactly. So let's talk about this thing called quantitative tightening, or QT for short. Now, if you're hearing this for the first time, maybe think of it this way. Like, imagine the Fed has this giant piggy bank, right? And after times of putting a lot of money into the economy, think stimulus checks, those kinds of things, they sometimes decide, hey, let's start doing the opposite. Let's start shrinking that piggy bank. That's basically what quantitative tightening is. They begin to reduce their balance sheet, which, it's a fancy way of saying they're taking some of those assets back out of circulation.
Right. And that has a big impact on how much money is actually sloshing around in the system, and that includes crypto markets, and altcoins often feel that pinch even more than Bitcoin.
For sure. And what I find really interesting is that the analysts we're looking at today, they've actually been tracking these cycles, these interconnected cycles for quite a while, like all the way back to the top of the last, massive bull market. So they have this like long-term perspective that I think is really valuable for helping us understand what's happening right now.
Absolutely. That experience of seeing those macro shifts play out before is invaluable. And it leads us to the really important data point that they've been watching. It's this thing called the Fed's net liquidity indicator.
Okay, so try to picture the Bitcoin dominance chart, right? The one that shows what percentage of the total crypto market cap belongs to Bitcoin at any given time. Now imagine overlaying this net liquidity indicator on top of that chart. And historically, here's where things get really interesting. When that indicator starts trending upwards, you know what tends to happen to Bitcoin's dominance.
Well, we typically see Bitcoin's dominance start to decrease, and that often lines up with a broader uptrend in the crypto space, especially for those altcoins you were looking at.
Exactly. So the big question becomes, why would this net liquidity indicator start rising in the first place? Well, a lot of the anticipation has to do with some potential changes coming from the Fed regarding this quantitative tightening that we've been talking about. The expectation is that they might start to slow down the pace of their balance sheet reduction and eventually even pause it completely. And this could potentially start happening as early as April?
Right. And if you think about the bigger picture, for a pretty long time now, the Fed has been in this quantitative tightening mode. They've been reducing the amount of available capital in the markets. It's like they've been slowly turning off the faucet. And liquidity, think of that as like how easily you can buy or sell an asset without really impacting its price. In a market with high liquidity, there are tons of buyers and sellers ready to trade. But when liquidity dries up, things can get a bit sticky. And altcoins, because they generally have lower trading volumes and are often seen as riskier compared to Bitcoin, they tend to be much more sensitive to these changes in liquidity.
Yeah, it's like they need that extra fuel to really take off, and that's where the historical precedent becomes so interesting. The analysts we're looking at, they point out that the last time the Fed finished a round of quantitative tightening, we saw a pretty dramatic drop in Bitcoin dominance. It kind of makes you wonder, right, if that same pattern plays out this time around, could we be about to see another huge run for altcoins once this tightening pressure lets up?
It's definitely a thought-provoking idea. And it brings up another important question. What could this mean for the total crypto market cap? We've seen the market kind of move sideways, mostly while the Fed's been busy tightening. It's almost like the market's been holding its breath, waiting for things to change.
Right, like a coiled spring just waiting to be released. And imagine what could happen when that pressure finally starts to ease, especially when you consider the overall market sentiment right now. There's still a lot of caution out there, even some fear. It's like the perfect setup for a big move.
It really is. And to really zero in on the altcoin story, let's look at what happened in the last cycle when liquidity started expanding. The analysis specifically focuses on altcoins excluding Bitcoin, with Ethereum highlighted as kind of a prime example of what altcoin holders should be watching.
Yeah, and speaking of Ethereum, there are some interesting signals popping up on the technical charts. Apparently, according to this 2-year moving average indicator, Ethereum has recently entered what's considered to be like a historically good buy zone. A 2-year moving average just means you're averaging Ethereum's price over the past 2 years. It helps smooth out all those short-term price swings and gives you a better idea of the longer-term trend. And get this particular indicator just flashed the buy signal for the first time since all the way back in 2022.
Wow, that's a pretty significant technical observation. It suggests a potential shift in long-term momentum for Ethereum. And the fact that it's happening right when we're expecting this change in the Fed's policy, well, that just adds another layer of intrigue.
It does. But wait, there's more. There's also this potential busted pattern that might be forming on Ethereum's weekly chart. Now, for those who are maybe new to technical analysis, a busted pattern happens when the price breaks out of a specific chart pattern, but then fails to keep going in that direction and reverses course.
Right. And in this case, the scenario that's being discussed is that Ethereum might briefly dip back down towards a triangle pattern that it was trading in before possibly making a big move upwards. Of course, it's important to remember this is just one possible scenario, not a guarantee, but it's definitely something to keep an eye on.
It is it's like maybe the market's trying to fake us out, shake out some of those weak hands before the real move starts. And this potential busted pattern on Ethereum, it's being presented as something that could be a leading indicator for a broader altcoin rally if it actually plays out.
Right. It kind of all ties back into the overall market psychology. A recent observation pointed out in the analysis is that the total crypto market cap has actually retested its highs from back in 2021. But a lot of the gain that were made since a specific event have been wiped out. And we've also seen a decline in the use of leverage and participation from retail investors.
So it's like a lot of the froth, a lot of the speculation has been flushed out of the system. And the thesis being put forward is that the next major leg up in the market could start around April, right in line with that expected slowdown in quantitative tightening. It's a really compelling idea, especially when you consider all the historical connections we've been talking about between liquidity and crypto prices.
Yeah, it really highlights the importance of paying attention to the Fed's net liquidity indicator. It's being presented as a key signal that could point to major shifts in the crypto market, especially in the dynamic between Bitcoin and altcoins. That whole Bitcoin dominance thing.
Exactly. So just to recap, the main takeaway here is that the expected slowdown in the Fed's quantitative tightening, which again could start as early as April, could have a big impact on the amount of liquidity available in the crypto markets. And historically speaking, more liquidity has often been a big driver for altcoin rallies, times where they've really outperformed Bitcoin.
It makes you wonder, right? How does all of this interplay between these big macroeconomic forces and the technical patterns we see on individual crypto charts, how does that all fit into your own view of the market right now? Are you positioning yourself to maybe capitalize if history repeats itself?
It's definitely something to think about. And while there are never any guarantees in the crypto world, keeping a close eye on these broader economic trends like what the Fed is doing alongside, big old-fashioned technical analysis of specific coins, well, that could give you a real edge. Might just help you spot those opportunities before everyone else. Seems like, once again, patience might be the name of the game.
Absolutely.
And on that note, we're going to wrap things up for today. But hey, before you go hit that subscribe button, leave us a comment. Let us know what you think about all this quantitative tightening stuff and its potential impact on altcoins. We love hearing your thoughts. And remember, fortune favors the bold, but in crypto, it also favors the informed. So stay curious, stay engaged, and as always, happy investing.
Couldn't have said it better myself.
All right, we'll catch you in the next deep dive.
See ya.